Okay, here we go. Okay, welcome everybody to our Micro Moment Trading podcast. Glad you're here today. We're going to be here for about the next 45 minutes or so. We have Tim and Micah, and we just came off our session of our Micro Moment Trading, which is every morning from 8:30 Central till 9:30 Central, or 9:45 sometimes. And it's not video like this, but it's live. And they have all their charts up there, and you actually learn when you subscribe to their service. You see them doing their trades, and they explain them, and they explain to you how to read our proprietary charting. It will enable you to do those same trades. And when I say those trades, we're talking, we've had a good week. We're up 88.38%. I told you wrong, Tim, this morning.
Yeah.
We did 11.53, not 7.49%.
Oh, right.
It got us to 88.38% for the week. Of course, this is the end of the week because the market's not open tomorrow. And for the end of the 48th week, which was last Friday, this is the end of the 49th week, we were up 4,986.94%, 103.89 per week. So if we hit tomorrow, we'd probably make that 103.49% again. But 88% is not bad. So Randy should be here. I think Randy's, I hadn't heard anything. He's not going to be here. So he'll probably be showing up in a little bit. He does our traditional covered calls. If you want to go to our website and sign up for our free cow report, go to www.micromomenttrading.com. Sign up for our free cow report, which comes out every Friday, like tomorrow, every Friday. It has all the emails from all our clients asking questions, saying how they're doing, all that kind of stuff. And it's for free. It's been published for over 20 years. So www.micromomenttrading.com. And in there, there's an explanation of this seminar they do, which is, very, very simple sessions. And it's every Monday through Friday when the market's open. Lasts about an hour in general. Sometimes they'll come back for a late afternoon session. Like the other day, they came back for a late afternoon session and racked up some astronomical huge gains. It's huge. And so, guys, today was a good day. Why don't y'all kind of explain what you do, and maybe some people, you can ask questions. Type in on your YouTube thing there and ask questions. We'll address any questions you have, or any comments you want to make, or whatever. Again, this is the end. I guess it's the end of our 49th week as a subscription service. We've been doing this for 2 or 3 years, this particular technique, but it was not a subscription service. So we really got it refined, and you can tell by those returns. And the nice thing about it, and I'll let Tim talk about this here in a minute, this kind of market, which is so crazy and so insane, we're making those kind of returns. We're making them in all ages, from some young folks that barely in their 20s to some really old guys like Tim. So y'all take it over and tell what y'all want to talk and kind of tell what you do, and then we'll kind of go from there.
Okay, Micah, you want to start off?
Go ahead, Tim.
Okay, so before we got on the call this morning, Joe and I were talking a little bit, and just how crazy this market has been. I just commented, I said, I'm glad I'm doing micro moment trading, because that's about as far out in the future as you can possibly do with this market. And, if I were trying to do longer trades, I just would have no confidence in this market at all. So, it makes me glad and grateful that we've got this technique that we can get in and out, in 30 seconds or less on trades. And it seems like when everything else is going to hell, we're still pulling out successful trades. I always love it when Joe says, well, that trade you just did, whatever, 3, 4, 5%, that's better than your money market did in a year.
Yeah.
And we just, our whole reference is completely different than the rest of the market. But what do? We do micro moment trading. We make trades that are less than, a minute most of the time. 30 seconds is a reasonable length of trade for us. We look for change, with our proprietary charting, which allows us to see changes in the market, just little shifts in the market that create tradable moments for us. And it's pretty simple. I mean, it's about the simplest trading you can do. We have very few rules. Number one is, if that trade turns, get out. Just get out. And we set up some pretty good guardrails for what we do. And I think our returns show it. We're almost at a year in this technique. And where are we, Joe? What's our total returns for the last almost year?
For the last 48 weeks, 4,986.94, 103.89 a week.
Yeah.
And yeah. Go ahead. I'm sorry.
Yeah, no. I mean, that's crazy. It's absolutely crazy. We've had some very challenging market conditions for the last 3 weeks or month now, I guess. And as the market was diving, 20%, 25%, we're still able to find moments and make positive trades. And that's the power of this technique, is that we find our moments. And they happen every day. It doesn't matter what condition the market's in. And we have been in probably the most challenging market conditions for what we do that I can remember.
Yeah. And
we're still able to make money. So, I think the true litmus test for any technique is, they work well in predictable times. So when the times become very unpredictable and we've got wild reversals and things that we've seen, we're still able to pull out trades. So,
yeah, I think it's interesting, Tim. Like today, y'all had 13 trades, not a single loss. You had 4 break-even trades, and the reason those are break-even trades is because learning the technique, you learn how to get out of something if it starts turning red. You don't sit there and think, "Whoa, it's going to turn around." Like speculators do. It's going to turn around. You get out of it. You may lose a penny. You may break even. You may lose 2 cents. But you live for another day, and another day is 5 or 10 seconds later when you go into another deal. It may be that same crazy deal. But the key, like they had 11.53% today for the week. They're up 88.38%. So there's a lot of trades, and when you subscribe to this service, you're watching these sessions. During these sessions, they're telling you we're getting. Tim, he does QQQ and occasionally SPY, and Micah does SPY and Apple and a couple others. But they tell you what they're getting ready to do. They say, "I'm entering QQQ. I just got it for $1.38." And a few seconds later, they say, "I just got out for $1.42 or whatever." And they're not trying to make huge gains. They're making 2.9, 2.15, 1.45, those kind of returns. And but when you add them all up, they're huge. And it's just amazing what both these guys do with those transactions. And you just follow along. Now, I just thought this too. We very serious tell this on these podcasts. But if you want to watch what they're doing, you can go to YouTube, put in Micromoment Trading, and we record these sessions. And you'll see today's session in a couple of days on YouTube. It'd be just like you subscribe to it. Now, it's not going to do you any good for trading because it's old data, but you'll see exactly what they're doing. That way, you can get a feel for it, and then you can join up. You can go virtually, and you won't lose a penny. Do it virtual trading until you're ready and you're successful. You say, "Hey, I'm going to take a run at this," and you get absolute maximum leverage without the use of margin. Instead of paying, I don't know, what does QQQ sell for? Is it stock?
It's at $298.
$298.
Yeah.
And he's getting into QQQ for $1.38.
I'm sorry. It's currently trading at $200.
Okay. So $200 stock, and he's getting into it for today, got into it for $1.80, $1.42 or $3, $1.52, things like that. So you have absolutely incredible leverage without the use of margin. In other words, you're not going to get a margin call. because you're not borrowing any money. And then typically Micah and Tim are in these trades anywhere from 15 seconds to maybe a minute. A minute is almost a death sentence. But so you're in them, and then you're not in them overnight. I mean, you have all your cash back, and you're ready for the next day, and you don't care how the market opens in the morning because we're not trading, speculating that we're going to get into something low and it's going to go up or do a put or whatever. We're trading the activity. We're trading the activity, the fact that they're just moving around. We don't care which way they're going. So it's quite exciting. Micah, why don't you kind of you have a little different trading way you're doing things?
One clear differentiation I want to make really quick is I think the biggest turn off for anybody, even that's in the service, is they view it in the same scope as scalping, which has a very negative connotation. Now, people throw around that term just like they do a lot, and without really understanding it. Scalping, first time I was exposed to it, I was trading Forex a little bit, and you're looking for pips, they call them. So these are fractions of percent returns, and you're trying to make them in the same time frame we do, but if you view it like that coming in, you're going to fail, because that's not what we're doing. We're taking a normal trade, a beginning of momentum, all these indicators lining up, and we're compressing it down into a really granular picture. So if you view it like that, people will just get in and out of the same momentum push for those fractions of percents, and that's what it is. So you have to make that differentiation in your mind. You're looking for full trades. Full trades are coming to you. They're just very compressed in the time and scale. But I mean, the dollar moves we play on SPY and Q are still there's still 50-cent $2 moves that we're trading. So just a bit of clarity there. But no, it's been going really well. This market's been very, very tough for every trader except somebody that just randomly bought shorts because they were apocalyptic in nature. They're doing fine now, but the rest of us who are actually trading are, it's a tough market. Everything's, not even that the market itself is tough, which it is, but it's different than we've ever seen. Traders we rely on data. So there's data sets over a period of time, and these numbers work out this way. It's very statistical in nature. And when you don't have any statistics, or you don't have any, baseline for your data set, then what do you do? So it's been interesting seeing our community as well, because we've been able to, we're kind of learning on the fly too. We've never seen this market before either. We've never seen, at least 1,000 points on the Dow every day, sometimes 2,000, sometimes 2,400, breaking every all-time record in a week. We've never seen that either. So being able to have that grace within our clients as well, none of them we haven't heard anything about, you should know this, you're the teacher, what do we do about this and this? They realize that we're all learning together and we're successful. We're still making it, but it's been a really interesting process for sure.
Okay, let me read Bill's. Bill has a comment here. Joe, I bought your book. Would it benefit me to read it all? Yes, it would. The reason is a lot of the concepts that we use are in that book that we're even using here on Macro Moment. That book was originally written for traditional covered calls, and we still teach all those courses. Randy, who's not able to be here today, teaches every day and has seminars all over the place, and he's been with us like 15 years. Has a tremendous following, and that book covers you buy a stock and you sell a call. And over time, we've never had a new issue of it, but we have that particular course, the covered call course, has a workshop manual, and it started off at 10, 15 pages, and that's like 350 pages, all with all kinds of changes. And a lot of the things we're doing here. Now, he also trades Micro Moment, because he has a micro moment that's lasts a little longer than their micro moments and structured a little differently. So yeah, that book would be a huge benefit. There's also a book we have on charting, and that I think Micah's real fond of, and kind of explains a lot like our proprietary charting, which is what you have to have, and because that's all they'll teach you. They'll teach you how to use that chart, and it's going to tell you when to go in and when to get out. And so just absolutely incredible stuff. All the time. And a good example, and I'm going to put an editorial. I was going to bring it up today, but Randy's not here, so I'll put an editorial in the Cal Report this weekend. There was an article by CNBC talking about how this tumultuous market has totally screwed up the technique of buying stocks for dividend income. A lot of people love dividend income, and they'll buy stock and hold it forever just for the dividend. But what's happening now throughout the market, good company, bad company, whatever, they're cutting those dividends or eliminating those dividends altogether because they're not making any money. There's too much uncertainty. And it's in that book, we have a technique under the regular covered call situation where you take your covered call, you take your stock, IBM, whoever it might be, pays a dividend. Now they get ready not to pay a dividend. And you can, let's say they were paying a dividend, then you just use our technique where you sell them out of the money, monthly covered call, which means maybe you paid, $300 for the stock and you sell a covered call. It's got $302. So, and every Friday, you're going to get called out or you're not going to get called out. If you're not called out, you keep that money, several percentage points. You keep that money and the next week you do it again. If you do get called out, then that's good because they're going to pay you a lot more than you paid for the stock. And you keep that premium that you got for it. You just go back in and buy the stock the next day for less and start all over again. Absolutely no way to lose money. But it totally, absolutely solves that problem. That's become a huge problem in just the last couple of weeks because these companies are cutting dividends right and left. And people bought those stocks because they're supposed to pay dividends. And so it's sort of like an activity. We had the solution, and now a reason for it exists, a real good reason. Mm-hmm. And so if you are getting a dividend, now you're getting a huge return because you get a dividend plus your weekly or monthly income on the selling the out of money covered call. There's all kinds of things. Somebody else asked some questions. Oh, here's heavy duty. Joe, I'm going to try asking my questions again, but only if you want to hear it. Well, what is your question? A 4,009% return on 10,000 account, is that $490,000? I think so. Yeah.
No, he's talking about our returns for the year. We don't use the whole account on every trade.
Right.
No.
So because we're not financial advisors, we're not, everything is just for educational purposes. We can't tell you what to invest of your 10,000 per trade. So we have people that trade everywhere from 1 to 5 contracts to 100, 200, 500 contracts. So just for the purpose of education, we just make the trade, and the percentage what you invest in it and your allocation of your portfolio is totally up to you.
There'd be a lot of circumstances. There'd been how much you invest, so on and so forth. But here's what you can do. This is a good example. We talk about this all the time. And I do this in relation to people that have kids or just get out of high school and they will go to college, they don't get a useless job. It's going to cost a lot of money. Sign them up for the course, open an account, Trade Station or anybody. They all have virtual accounts. Put $2,000 in that account. Never add any more to it, and then have your son or daughter trade that virtual account until you become real proficient at it, and then start trading more money. They give you the virtual money, probably around $100,000. But that $2,000, let's say you're trading real money, $2,000. If you're following them and you make, you learn this thing, you make 6% per week. 6% per week. Now they're up 88% for the week. 6% per week in 24 months. That $2,000 is going to compound into a little over $800,000. A little $800,000. Now at that point, in our example, you say, okay, whoa, this could. Couldn't send a kid to any school to make this kind of money. Now he can go pay for it himself if he wants to waste the rest of his life. But now that 2,000, you've never added anything to it, and you just keep rolling it over, and 6% per week, which is easy. That's not even hardly a couple of these trades just today. It grows to 800,000. And at that point, you say, okay, I'm going to take 6% as a salary. 6% of 800,000 is around $48,000. So you make $48,000 for the month. You leave the other 3 weeks at 6%ers in there. And it continues to compound. Pretty soon it's going to be way in excess of $1 million, much higher. So that probably is a little better answer for your question, because it's just assuming 6%. You know, that may be 3 or 4 trades, but you only do it once a week, and that's it. And that's how the fantastic amount that this thing can grow. Okay, but that's compounding, which has always been. That's always part of the traditional covered calls. A long time ago, when we first started compound stock earnings, and we still do compound stock earnings stock. We tried to get 3 or 4% a month. And it was only one expiration week. That was the third Friday. Third Friday was it. Hey, there's Randy. Randy, I'm telling you a story and giving you grade, talking about this article.
Which way wants to go here?
Yeah, this article I just read in CNBC about how the whole market for dividend producing stocks, it just gone to hell in a handbasket because people are quit paying dividends, and now these people the only reason they bought the stock is they wanted the dividend, and you know, hey, you using your concept of out of the money covered calls on a weekly basis, it's a no-brainer. And you know, so they still, even if the dividend's not there, they're still gonna make a hell of a lot more than dividend pays anyhow. So I'll turn it over to you and you can explain that in just a second. I didn't look up. I was sitting here and so enamored with my microphone and myself and my voice that, you know, I'd forgotten that you even existed. Anyhow, Randy, we had a question earlier. A gentleman asked if he had bought the book. Should you read the whole thing? And I told him absolutely sure. Absolutely. I said, because it's basically the covered call techniques, but it says it's there's not been a new edition, but it's been so much stuff added to it. If we did it again, it'd probably end up being 3 or 4 books, or it'd be a book that's 5 or 6 inches thick. So you might discuss that a little bit. But get to my story. Back to my stories of the gentleman that asked. We don't know the amount of money is going to go into what because you're compounding. You don't need that much money to make that much money, and you only need 24 months to grow 2,000 into 800,000. So
Well, you got one from Brian.
here's Brian, my buddy from Fort Worth. Joe, I have a 3-part question. Yeah, sure, Brian, go ahead. This is part 1. Generally assuming a stock price of $1 per contract, okay, and that's good approach, QQQ, is the following true. 6% times 2,000, is that how many contracts? Is that 1,200? Is that 12,000?
$120.
$120, yeah. It shouldn't be 20 cents. It's 120 contracts.
$120. 20
Yeah.
contracts with 6% gain.
Equals 120. 1201. Sell of 20 contracts. I'm not.
The question's not quite right there.
I'm not sure I'm getting the math here.
Yeah, what on that part 1? What are you wanting?
So he's saying 6% of 2,000, you make $120 your first week.
Is that what you're saying? Yeah.
I think so.
Yeah, that's 120, right?
Yeah.
True. Yeah.
Okay. Then 20 contracts, 6-cent gain is 120. One sale of 20 contracts, 10-cent gain raises the 120.
So I'm not sure.
10 contracts would be 100. No. Yeah, 10 contracts would be 1,000. So 20 contracts would be 2,000 invested, 20,000 total contracts bought. Yeah, but yeah, okay. So, but the thing about this, yeah, I see where he's going, Joe. But the thing about this, Brian, is we're talking a week, right? So on Monday, you have $2,000 to invest. On Tuesday, say you beat the records and make 6% on that first day, the money clears and you're back to zero on Tuesday. So on Tuesday, you have 2,100 to invest with. Not, it's not like you're locked at 2,000 for the whole week.
Right.
So depending on what you make, it compounds within the week as well. So your base actually goes up intraday times 5. Does that make sense? So
Brian, we kind of addressed this the other day on the morning session. trying to figure out compounding, you can't figure. You have to use a calculator. You put it in the calculator and you say, you put in, you're gonna make, you're gonna make 6% on $2,000, and you're gonna do it for how many months? 24 months. And you're not gonna put any more money in, and you're just gonna keep compounding what is in there. You're not putting new money in, and that's what it ends up being. I don't know why you keep trying to figure it out.
So your goal that first week is to make $120.
Yeah.
Whether you buy 5 contracts at a time, 10 contracts at a time, if you can make that 120, you're out 6% for that week, and you have a total of $10,000 to invest that week to try to make $120. Does that make sense? So if you can really make, what is that, 1.2%?
Yeah.
Yeah, if you can make 1.2% that week, essentially because of the way options investing clears. It clears the next day. So I hope that helps.
Yeah, this is a simple true false question. Good. I'm glad you're getting the but, hey, the question disappeared.
He's saying that last one was.
Okay. Without reading more into my question, is it true or false?
Yes.
Yes, it is. Yes, it is.
Okay.
It is. Yes. It is true. With those numbers, yes, it is true. And you're simply buying more contracts each day and building up your money.
Yeah. In my little calculator here in my iPhone over here, your compounding program in there. And here it is right here. You're not going to be able to see it. It says principal $2,000, 6% period, no deposits, duration 104 weeks. Mm-hmm. That's how many weeks are in 2 years. Mm-hmm. And down at the bottom, as you can see, $856,722.13. Mm-hmm. Now, Brian, that's all I know about compounding. And to go in on a daily basis, I mean, I could pull up the schedule. It would show off every single day, for 2 years.
Yeah, and you can actually do that, Brian, with an amortization list. Joe's calculator will probably give you the amortization list, the day-by-day amounts. But if you pulled up an amortization list and just put in those numbers, you'd see day-by-day how it compounds.
I just don't think any of it's needed, right? The math is never going to be perfect. You're never going to buy exactly at $1. You're never going to buy, commissions are different for everybody. Not everybody, but a lot of people pay anywhere from 25 to 65 cents in commissions. Yeah. So there's just a lot of variables. So the general idea is that, over the week you have $10,000 to invest. If you can make 120, that's your 6% on your initial capital, and you're good to go.
Yeah.
So the next time you're trying to make 6% on $2,120. In theory.
Yeah.
That's what you're doing. And then you're gonna make another a little more than $102, whatever it was, $120.
Yeah.
And now you've got that the next week. Now you've added another 100, so now you got 2,300 or 400.
Yeah.
Do it on that, and that's how it goes. It doesn't sound like much in the beginning, but boy, it really adds up.
Yeah. But you know what? Let's not overcomplicate this. Really, what we're here to do is learn this technique, right? Learn the few simple rules and have consistent trading. That's what we're here to do is have consistent trading. And with our charts and the few simple rules that we have, you can achieve, consistent trading. Will there be losses? Of course there will be. We all have losses, right? That's part of it. But what we're learning to do is minimize those losses and maximize our gains. And the way we do that is we get on the call each day, we learn from each other, and we trade. We have a high degree of transparency in what we do. More is coming. And, the more you look at this, the simpler it is, right? And that's the beauty of this it's simple.
Well, this last week on Monday, you didn't have any losses. On Tuesday, out of 11 trades, you had one for 0.0054 of 1%. Yesterday you had 5 trades. You had one that's a loss 0.0074 of 1%. So the whole thing is learning how to get out of those things. You never sit there when it turns red and say, I'm going to wait for it to turn green, because you don't do that. And you didn't have any losses today. So, yeah.
Yeah, and that's
Okay,
that's
Brian.
our goal.
Another true, false question. I like the way Brian likes to get it down simple, right? Generally speaking, using the same reasoning, 6 times 500,000 equals 30,000, which is 5,000 contracts okay. That's
Yeah.
true. Yeah, that's true. Yeah. And you wouldn't believe what that'd compound to.
Is Brian our lawyer?
Yes, he is.
Yes. Okay.
And a good one. But that's his fault right there. He gets the technical. I have lunch with him went back and forth work two or three times a week.
Mm-hmm.
I can tell you, it's a strain. That's what he talked to. Okay, we've been ignoring Randy. Randy, take off. Tell people what you do and how have your returns gone this week. And anybody has any more questions, go ahead and ask them. We'll get to it. Yeah.
First, I want to apologize for being late. This is Thursday, but it's really Friday this week. Of course, Friday is for weekly cover calls. It's expiration day, and it's pretty busy. So I've been just trading like crazy this morning, just making all kinds of money. But an answer to that one question you had, Joe, from the one person that bought the book, and they can read the book and they can start virtual trading. But we also have every Thursday evening, I teach a covered call coaching session, live webinar that's then also recorded that you can watch later on. But that would be a great thing for somebody that's just bought the book and wants to read the book and then try to figure out how to do covered calls the compound stock earnings way. Subscribe to the weekly coaching session, and I answer all your questions, review the processes, techniques, anything that you want to know and learn and get better on with the covered calls. That's Thursday night. So we have that every Thursday night, except this week it was last night because I like it to be at least a day before the end of the week as far as the market goes. But that's a great way to really start learning week after week after week and get better and better with the covered call process. So not only do you get to ask your questions, but you hear other people's questions and learn from what they're asking at the same time. So you can review those webinars over and over and over again to just keep learning on them. So that's one thing that I would suggest if somebody's grabbing the book and trying to get into learning until they have a chance to go to the full 2-day covered call seminar. The Thursday night is a great way to keep learning every week. The next thing, of course, Micah and Tim have talked a lot about the micro moment trading. So I'll just tell you what I did so far this morning. This has been a great day for micro moment trading. And of course, I do SPX. And I actually did one trade on SPY this morning. So that for those that want to have less capital commitment, the SPY is what I would trade. But I usually just do the SPX because of the tax treatment. But I generated 25.5% income on a SPY put this morning.
Wow. Nice.
And then I did 1, 2, 3, 4, 5, 6, 7, 8 SPX puts this morning for a total of 27.5% return.
Between the two of them, right?
Nice.
So that's just the SPX. 1, 2, 3, 4, 5, 6, 7, 8 trades on SPX. SPX was 27.5% return.
Let me remind these two guys.
Wow.
They only made 11.53% this morning. Yeah.
Well, that's because they were busy being on the webinar. See, I was
By yourself. That's right. Yeah.
I was remiss in not getting on the webinar at the right time because I was so frantically doing all my trades, and then I looked up and said, "Oh, it's time to get on the podcast." So,
wow, Randy, you're just kicking it.
Time flies when you're making money, man. Good work.
Yeah. Well, when the market's going down, that's the easiest way
Right.
Easiest way to make money on micro
It's
moment
way
trades.
easier than calls. Yeah.
Yes.
That,
Yes.
that, the puts are just the easiest way. Now it's kind of going crazy right now. Who knows what direction it's going every minute? But there was some really good, clear entry points on the intraday streaming chart there for
Let's
puts.
let's take this question from Brian and come back to you, Rick, because this question seems to disappear if you let me say that too long. Okay, Brian, therefore, it seems that the $2,000 compound interest example does not take into consideration the fact that the same percentage profits are much harder to achieve at the higher dollar amounts. No, that's totally, I don't know what the hell you're thinking of, Brad. That's not, it's no.
No.
You get 6% on 500,000, same way you get 6% on 2,000. I don't know what the hell you're talking about. You're gonna have a lot more green cash. Because you get 6% on 500,000, it's $300,000. You know, you get 6% on 2,000. For the initial 2,000 is $120. So same.
Well, and if you're trading that kind of money, I mean, if you're actually going to put $500,000 on one trade, which I would never do myself, but that's why you're trading things like the QQQ, which has hundreds and thousands of contracts traded. Apple, I don't look at Apple too much, but I'm sure they have thousands of contracts. The SPX and the SPY, they have thousands of contracts at each different strike every single day. So you're going to just get lost in the middle of a big crowd with that kind of money. You don't want to trade something that has 5 contracts traded every day if you're going to do 5,000 contracts. That just doesn't make sense. So
the same.
Yeah, here's it, Brian. That 500,000 under the same compound, but like we did the 2,000, 6%, 104 weeks, compounding weekly. Okay, at the end of 24 months is $214,180,531.46, of which you always have.
So the same thing applies with the 2,000. You're not. When we say this example, people seem to think that you make a trade, and because we make 6% trades, that you make a trade, it's 6%, and then you go from 500 to 530. It's in a week, right? So just as I said, with the 2,000 gives you essentially 10,000 to invest with if you're on a cash account. That's 500,000 is your account size, right? So that's not a per trade thing. That's nothing like that. Now we've had a few clients that have done 500 contract trades. And, in and out with ease. We've never had anyone try to push it above 500 because it's just unnecessary risk for us. But when you're looking at 400 and 500 contract trades, I mean, you're up into 40, 50,000, depending on where your pricing's at. And that's the one trade, right? So now you have the whole week, and your goal then that week is the 30,000, like you said. So, I mean, how many trades did we make today, Joe?
Made 13.
13. So, there's 2 of us split it in half is 6, we'll say. So, 3 to 6 trades a day. And
y'all are making those returns on a daily basis. And we're talking about 6% per week. Let's say 3 trades, 2% each. Okay. And you do something in one day and you quit for the rest of the week. So that's what I'm saying, that the huge benefits starting off.
There's a limit. There is a limit, right? You can't go into one of these trades with $500,000. So you're not going to be trading billions a week.
Okay.
Like the limit is at the point where you're making so much money that you have other problems. Like if the cap is that you can't invest, $100,000 into each trade, you have different issues already. So, I mean, this is for beginners to advanced traders.
Where do they have a cap like that? That you're limited.
Yeah, you couldn't trade like $1 billion a week. I don't think you can size in. I mean, you couldn't size in like 2,000 as fast as we sized in and out. You couldn't size in 1,000, 2,000 contracts.
There's no rule. It's just the facility to do that. There's not that many contracts. There's not that many people trading. Blah blah blah. That kind of stuff.
Yeah, just oversaturated.
There's not like a law. You can't spend more than $100,000.
No. Yeah, there's just not enough supply for that demand.
Yeah.
But by the time you get there, I mean,
Here's Joseph. Which technique do you consider the safest strategy that you guys teach? I hear you guys talking about overnight being in cash is better. It's always best to be in cash overnight. Now, if you go back to the slower trading, a lot slower trading that Randy does, he still does the old traditional covered calls, and he's got various that or sort of an offshoot from this micro moment. He's just typically run a little longer. I don't. There's nothing as safe as buying a stock and renting it, paying $100 for the stock and renting it each month or each week for 3 or 4% gain. And you're doing an out of the money call. There's nothing safer on the face of the earth. Nothing can go wrong with that. And unless you don't know how to structure it, and people that don't ever take the course don't know how to structure traditional covered calls, they end up losing money because they don't know what the hell they're doing. You structure it where it's impossible for it to lose money. And Randy's is as safe as real estate. That stock is realty, is a rental unit, and he's renting it. And that's why the forward to the book is Kiyosaki, who's considered one of the best real estate guys around. Doesn't know much about investing in stocks, but he's one hell of a real estate guy. And he wanted to write the forward to the book because he said, "You guys, all the guys I've ever heard of that treat stocks like real estate." Mm-hmm. And there's probably maybe a little more risk in Micah and temp stuff because you got to get in, you got to get out, and it's not like you're trying to speculate. If you say you're going to get out and your option expires on you the next day, you're going to lose all your money. That's why you got to know what you're doing, and that's what you learn during the deal. Randy's not going to have that problem. He's going to buy that stock. And he's buying a stock that's maybe been around 100 years. It's going to be around another 100 years. And come the end of the Friday or whatever the expiration is, it's going to expire. He's either going to get called out or he's not. If he gets called out, he makes money because he's structured that way. It's impossible for him to lose money. He's structured that way. If he doesn't call it out, he's still got a stock. Absolutely no risk whatsoever.
Yeah, and still has his dividend too.
Yeah, if he goes brain dead while he enters a transaction, doesn't come out of it for a couple of months, doesn't hurt anything. He's going to be great. Where these guys, they go brain dead for a couple of minutes. They're done. They're toast.
Absolutely. The most conservative way to trade the market is the compound stock earnings, traditional covered call.
Yeah.
As Joe said, you buy a stock, sell a call against it. And if you are just doing it to generate income, you use an in the money call. If you're doing it for a long term, you use the out of the money call. But we teach how to do that, and you generate income whether the stock goes up, down, or sideways. And right now, with the market down like 30% from the all-time high, it's who knows if it's the lowest the market's going to go. But this is definitely a good time to be doing the traditional covered call because you're getting the stocks at a 30 or 40% discount from where they were just trading a month ago. And they could still go lower, but with the covered call, you can keep generating income on that. And even if they go lower, structured correctly, you could still be called out for a profit.
Yeah, that's the whole point. You buy that stock, and everybody says, "Well, I paid $50 for the stock." Whoa, now it's gone down to 40. It doesn't make any difference when you're using Randy's covered call technique because when you pay 50 for it and you sell the call for 5% return, you made 5%. Now, what happens if it goes down? It goes down to 30. What you learn in there, if it goes to 30, you learn how to make that same 5% on what you paid for it originally. So even though the stock goes down, because stocks go up and down, you're making as if it didn't do anything because you're making 5% on what you paid for it. And that's what you learn. That's why it's such a valuable course. And that's why there's all kinds of tools. There's a toolbox that goes along with that. All kinds of tools that facilitate you doing that. It doesn't make so it's just insane that somebody wouldn't do that. Why everybody wants to be a speculator. So Randy, were you
No, he wanted to know what the most conservative way of trading. Now, being in the market is risky, just automatically. So you've already taken on risk to be in the market. But the most conservative way of trying to generate income, if you're going to be in the market, is the compound stock earnings in the money covered call process, structured appropriately. It'll generate income and get your capital back. And it only takes a few minutes a day. It's not like Micah and Tim were sitting in front of the computer watching the screens up and down for some number of minutes or hours every day to generate income. With the covered calls,
Randy, they only work 5 hours a week.
there you go.
Only work 5 hours a week. An hour a day. Give me a break.
With a traditional covered call, you could do a half hour a month. So it's not. It's a slower process.
I'm working hard.
Yeah, you don't have to be watching minute by minute. You just analyze every night. You just look at it and say, yeah, yep, still doing okay. And at the end of the month, you're either called out or you're not. If you're called out, you got all your money back, you got your return, and you go find another one. If you're not called out, then you implement the management technique to generate income for the next month. So that's the least amount of time and the most conservative. Now, you're not going to make 5% a day or 27% a day or 15% a day with the covered call, but it's a good, steady process for month after month. It's a good way to begin as well.
Yeah, and you know, you say, people say, well, but I buy a great stock that cost me $300. You don't have to do that. If you don't have $300, you can use what and you learn this in the book, a LEAP, which is a long-term option that's treated just like owning the stock, and you sell your calls against that. Instead of paying $300, you might pay $3 or $4 for that long-term option, and you're getting a huge return. You're literally leveraged return because you're selling those same calls as if you pay $300 for the stock, but you only pay 8 or 9 or less than that for the LEAP, and it's just like the stock. And so there's all kinds of huge benefits. The problem that Micah could not even apply for unemployment insurance because I think you at least work 35 or 40 hours a week, right? They say you can work, guy. Get out of here. You don't even work. Yeah.
Yeah, we were talking about that a while ago. I was thinking of going back into bartending or something.
It's some time.
And don't get me wrong, there were days there where I would just, after getting off the webinar, just go into research and just be researching, everything about trading and for 16 hours, and there's just only so much of that you can do without staying healthy,
But see, that's the thing, Micah. Me, you, and Tim, we can continue doing the same job we've already been doing, and we have zero risk of the coronavirus because we're just at home. We're at home in our safe space, earning our income. So we're not subject to unfortunately people that are going on unemployment. And
that's what we do here. We've been practicing this for a long time. We got Mike up in Seattle and Tim down in Georgia, and you in Georgia and Phoenix, and I'm in Puerto Rico.
Yeah, that's some social distancing right there.
Yeah, social distancing.
And our man that makes all this stuff work mechanically. Marcus is in Dallas, and Sue Ann's in Fort Worth, but nobody ever sees Sue Ann. She's so secretive.
Yeah, well, I thought that was good, right? Because at the beginning, I was like laughing at everybody trying to learn how to work from home and not work as much, and they were losing their minds already. And I was like, oh, I already know how to do this. But then over the next week, I started to realize how much I rely on those little times out and the weekends and actually going places. You rely on them more when you already work from home. Yeah. So I've been losing my mind a little bit for sure.
Let me tell you something about what's going to happen when things come back. It's going to be huge, and all my predictions always come true. And in another life, I was a developer, and I developed prime office space in Florida, and New Mexico, and Texas, and Arkansas. And what's going to happen is these companies are discovering that they've got these people at home because they can't come in, but it's working out great online. Mm-hmm. And they're going to say, you know what? All the extra money we pay, prime office space is very expensive. Mm-hmm. And all this space we're paying, we can give these people raises and still save a hell of a lot of money just having them, work from home, only a few of them coming in. And mm-hmm. then what's going to happen is, and that's going to totally make companies want to do that because they're going to be making tons of money that they're paying out in rent right now. Mm-hmm. And think of the employee. Out there in California, around LA, you got to drive a couple hours to get to work, burn up a lot of gas, screw up your car, and you got to pay for parking. So it's going to be a huge savings, whether you're paying for your parking or the company, huge savings. Then what's going to happen you're going to see a total absolute depression in developers that build high-rise office buildings because nobody's going to need the son of guns. Who needs to, have an office expensive in a 42-story building? Nobody does. Nobody does. So they're not going to have that. They're going to have a fraction of the space they otherwise would have, and that's going to absolutely come true. And that's what's going to happen. So it's going to be a great boon for companies. It's going to be a great boon at the end of the day for the employees because they're not going to have to spend their entire life driving, putting their life in their hands on the road, and paying huge fees for parking somewhere and griping all the time. That's what's going to happen. Just think about it. Tim and I were talking about that earlier. Yeah. So,
yeah. Especially in Atlanta with our crazy traffic.
Well, yeah, exactly. All that traffic,
It's crazy, and not to mention it'll help the environment, clean up the air a bit.
Absolutely.
So get these cars
I
off.
think the biggest question is how things are going to change afterwards. How people are going to respond differently and handle situations differently. I think there will be a change, like you said, in terms of like how people go to work. But I think there's going to be other ones that we don't see coming as well that are going to be, people are going to do things differently. And I'm curious to see what that looks like.
Well, let me say one more thing because we're getting close. So if anybody's got any questions, ask them now because let's keep on here a few more minutes. But here's the deal. When you attend Randy's seminars, you see and you subscribe to his services, you get his trades. The emails come out, multiple emails a day on when he gets in a position, when he gets out of position where he's made. And so you learn how to do it. He's not doing the trading for you, but you're learning how to do it. Just like these two guys, Mike and Tim, you're on that morning session. And I wish I had a copy that you could listen to it right now, one of those morning sessions, because people are constantly reporting what they're doing. On Friday, we have a Fun Friday phone day, and people can actually call in, and everybody can hear them and, talk to them that way. But otherwise, they got a little question box, a comment box. And today, they're just turning out profits right after the returns we don't get. We don't get. Seriously, because they're sitting there talking and trying to teach, and those clients are just sitting there, doing the trades, and following the rules. And gosh, that brand new kid, Puerto Rican, what's his name, Sean?
Sean.
Yeah. He's out of college. His freshman year in college. He's out right now because they closed it down for the duration, I guess. And I told him he was never going to go back to college. He said they're making money. I was like, only been doing this a couple of weeks, and he sends us every trade. His dad sends us every trade, and other people send us their trades. And you got to sit in one of those sessions. It's just absolutely unbelievable. So, yep,
absolutely.
So
we're here every day, Monday through Friday.
Yep.
Except for holidays.
Yep. Well, okay. Any last questions or comments or anything? Anybody might have? Okay. You notice how I got my hat on? You can't see I don't have the ears anymore. We had a big terrible because you can't get a haircut. And they hear it on that morning session about once or twice a week. My lawn guy comes by and he's got one of those weed eaters. And so I made a comment. I said, I wonder, because it's only like a 6-foot pole, so he's going to be 6 feet away, right? I thought if he could, and if he's real good, he could give me a haircut. Well, unbeknownst to me, it also got my ears. And so, it's another story. Here's Thomas. Can you please describe what we receive once signed up for the Micro-Moment subscription? Thanks. You guys want to take that?
Sure. Okay. Well, first off, what you get is you get our trading from Monday through Friday from 9:30 to 10:30 Eastern time. You get to sit in and look over our shoulders while we trade. And as we're trading, we're explaining what we're doing, explaining the technique, how we're getting in and out of trades. We talk about a lot of things, but
you get the micro charting, which is the biggest deal. They get that for free.
Yes, absolutely. When you're on the call with us in the morning, you're seeing our proprietary charting that we use to select our trades. So you have everything that you need to be able to trade.
Yeah, we dip into platforms a little bit as well. There's a lot of different tips and tricks you can do to take your entry and exit time down to a third or a quarter of how long it actually takes you to get in and out of positions too. So we can. The primary focus is always, of course, reading the charts. It's a language, and that's what we're learning. But we also, heavily realize that it does depend on how you get in and out of trades, the option chain movement, what the option chain is doing, reading that a little bit. Kind of similar to tape reading, if you're familiar, but not quite as in depth because we want to make sure the charts stay the main focus. But yeah, basically just a full analysis. We don't overcomplicate it. We don't do, we don't have archived 300 hours of studying and things like that, because it is really just simple,
Well,
So,
I think the other thing too that's important is, and that's why people should go to YouTube and listen to the sessions. The questions, the endless questions people have, because you got a lot of people on there. So people, if they have a problem, they solve the problem and they stick with it until they do. So it's not like, hey, you can't ask any questions, blah, 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 blah. They're going to help you solve, and I've not heard one that hadn't worked out. Not heard a session that somebody's asked something that they said, we don't know, or whatever.
Yeah.
So that's like I say, it's sort of like talking to the Warren Buffetts of the macro moment. He didn't know a damn thing about it, but he's probably too old to learn. But they're sitting there answering your questions. So.
Yeah, we have a question box you can type into at any time. It's live for the duration of our hour-ish webinars in the morning, so you can always ask any questions. So that's how people report their returns to us, everything like that.
Yeah. Also, if they come back, then they ended up in the morning at 9:30, 9:45 Central Time. A lot of times they come back in the afternoon because markets change, or maybe that morning the market wasn't particularly good, so they come back later on around noon or so Central Time. And you get notified via your cell phone. It's Sue Ann in our office sends you a text and says they'll be back in a minute. The screen stays on all day, so you just leave it on. And if they come back, you're right there. And they did that a few days ago, and he racked up, what was it, 70-something points, or like 70% or something like that.
The second session?
Yeah.
Yeah, I think it was 50.
76 or?
No, I think it was 56.
It's 58.94 during that session. I think it was about 7 or 8 trades.
Yeah.
Okay, yeah. So that's what you get. Yeah.
Yep.
So.
Yeah, you get to learn the micro moment technique that we do, and
So they get the charts and they get 5 hours of training every week.
Yep.
Live in the market.
Yep.
As we're doing it. Yep, absolutely. And with that, you get an understanding of why we're making the decisions we're making, why we're entering, why we're exiting. We talk about the charts where things are at quite a bit, so that you can become familiar with the essential tool that we use for trading, which of course is the charts.
When I made that slur about the vicious slur about Warren Buffett, let's not forget who's buying a lot of those options, because when he decides on a company and nobody knows about it, he's made the decision he's going to start going out and buying options to buy that stock at very good prices. So he's one of the, people say, well, who buys these things? Well, I tell you, big companies do, and people like Buffett and, insurance companies, all kinds of people that want to hedge whatever they're doing. Yep. And those plus you guys are buying, Randy's buying, but the huge, you see huge orders, they're coming from people like him. So,
yeah.
Okay. Now, I'm going to give us about 10 more seconds. If you want to ask a question, go ahead.
Hey, Joe, we're at an hour, so I don't know when you want to end.
Okay.
People keep typing in questions, but I think we've run out of time.
Oh, okay. Sorry. Come back next.
Hey, there he is.
Hey, Randy,
there's Marcus.
I know. Long time no see.
The man behind the curtain. You finally get to see him.
That's right. We need to have a master's class or something so we can get together.
Exactly.
Yeah, absolutely.
Yeah.
But
now,
we can't do it yet because you got to stay 6 feet away. You know, there's no.
now we know. Now we know who the guy amongst us is the Doom guy. It's Randy. I mean, it's Marcus. Nobody's ever seen him before. He just comes back to give us
That's
bad
right.
news.
There you
Okay,
go.
we got a couple of seconds. Bye bye. See everybody
Happy
later.
Easter, everybody. Stay
Thank you.
safe.
Happy Easter.
Good
Yeah.
luck to you next week.
Bye bye,
So
guys.
long.